he started.
Yes, we're in.
Yes.
Yay!
Okay, well,
Great.
At last.
before you get started, and
Yeah.
I think Stephanie's on there, maybe we'll go for a minute and just have everybody introduce themselves, because we may have some new people.
Okay, that'd be great.
Gary, I have you on the top of so I'm just going to go on.
Okay. I represent Central Reform Congregation, St. Louis, Missouri, and I am a climate reality presenter. I tell the truth about climate change regarding science-based truth. And I was trained by Al Gore and some other Nobel Prize winners.
Wow.
Fantastic.
Great
And
credentials.
I divested a year and a half ago.
Mm-hmm.
Great. Okay. John.
Hi. Let's see. I'm in Winchester, Massachusetts. I belong to Temple Isaiah in Lexington, Massachusetts, and and I know David because of the JCAN group here in Boston area, and I'm a relatively inactive but card-holding member of Climate Reality Project.
Oh, great.
Myself, and I haven't divested, but that's why I'm interested in seeing what you have to say.
It's easy. It's
yeah.
easy.
There's a lot of heavy
minutes.
lifting we have to do, but this ain't it.
Yeah.
Okay, great. Thank you, John. David.
Okay, I'm David Schreiber, member of Temple Shir Tikva in Winchester, where John lives. I live in Arlington, Mass, actually. I've been with the Jewish Climate Action Network, I think, since just before it launched. I have been involved in fossil fuel-free investing now for 14 years. Became an investment advisor. That's more or less the time I got my investment license. Prior to that, I was an orchestral musician, but that's another story. But I've been working in climate activism and various forms of social activism much of my life. And this is nothing new to me. So I've made myself pretty knowledgeable on this subject, put together this slideshow with some help from Rabbi Arthur Waskow at the Shalom Center in Philadelphia, and my friends at Green Century Mutual Funds, who were the first fossil fuel-free mutual fund available on the market.
Right. Well, thank you, David. We're going to get into your presentation in a minute. We've got two more people. David, is it Zucker?
Yes, David.
Who's
Zucker.
up there? We got two Davids here.
I live in Aurora, which is a suburb of Denver, and I'm sympathetic toward this this effort, and I'm looking forward to the slideshow.
Well, great. Well, we're glad you joined us today. Thank you very much. And then finally, Stephanie Joffe. I guess she hasn't been able to get her video going, but she is on us, join us. So she'll be listening.
Hi, I'm Stephanie Joffe. I work with Scott at Temple Solel in Hollywood, Florida. Scott, you can speak. We do a lot of environmental stuff, mostly locally. And I don't know what else to say, but I'm interested in learning about this.
Okay.
And Stephanie,
I just have one question for David, which is what congregation do you belong to?
Temple Sinai.
Here, Tikva in Winchester.
Oh, I'm sorry, David Zucker.
Temple
David
Sinai.
Zucker.
Oh, David. Okay.
Okay.
Right.
My mom was a member of Emmanuel.
Uh-huh.
Okay, that's all.
Okay.
and then David Schreiber. Before you start, I just want to say thank you so much for agreeing to give this presentation. And I know, we had a bit of a technical issue last time, but I hope we're getting better at this stuff.
I think we won the wrestling match this time.
and so we're going to turn it over to you. And we are recording this, so I am going to post it for people that were not able to join us there. I know I did get some emails about people who weren't able to join and wanted to and hope we would record it. So just for that information. And so take it away, David. Thank you very much.
Okay. Just for those who are just getting on or didn't get got on later than after Gary recited the statistics on coal in response to our present occupant statements. Gary, could you repeat what you said earlier, please?
I would like to. So, headline from the St. Louis Post-Dispatch business section regarding coal, and then the analysis. Here's some details. St. Louis has 3 energy companies with coal, and the biggest one is Peabody. Peabody shares have lost 72% of their value since January 1st last year. Arch, which was a spinoff of Peabody, their shares are down 17%. Both of these companies went into bankruptcy 3 or 4 years ago. And a third company based in St. Louis called Foresight Energy delisted by the New York Stock Exchange after its shares fell 98% last year. U.S. coal production fell 9% last year and is likely to decline 14% this year. Not a good place to be investing.
Nope, it's not. And it's kind of like insisting on continuing to invest in, I don't know, horse bridles for pulling carts. It's totally obsolete. But anyway, so here's my show, and there's a lot of heavy lifting we're going to have to do in the coming years, especially in the area of legislation and lobbying, to move us into a 100% carbon-free environment. And the first piece of that is going to have to be to get some kind of price on carbon so that people become aware of what they're paying for. And we create some funding system, for the things that need to be done to keep our infrastructure going, because it's been rotting out from under us for several decades. But that's another issue. But what I'm going to talk about is really the easy stuff. It's the low-hanging fruit. For those of you who have not really looked into your portfolios, and I don't just mean those who hold investment portfolios as such, you also undoubtedly have IRAs, 401ks, maybe a 403b, maybe a 529 college savings plan. There are many different ways that you are actually exposed to the stock market quite directly in an ownership role. And you need to look into them. Look and see what's in your 401k. Look and see what's in your IRA. There are places you can go that you can move that money. And that is the way to confront, and this is obviously from Rabbi Waskow, confront the carbon pharaohs.
David, may I interrupt? Do you
Sure.
take questions as we go?
That's best, yes.
Rabbi Waskow was at CRC in St. Louis, which is Central Reform Congregation. And he hit all of these very important points. Regarding divesting, David, you were just saying you need to look at, all I did was call my investment advisor and said, I want to divest. Would you look deep into these mutual funds and such that we've got and let me know which ones we need to change? And within days, I had an answer and we made the action immediately. Plus,
Excellent.
you can also say, I don't want to be involved in any weapons manufacturers or cigarette companies or whatever your choices might be.
Or private prison.
It's that easy.
Or corporate prison industry. There's a number of things. I create portfolios with these that exclude these things entirely. And as I've said to potential clients, you know, if you want that, I'm the wrong person. I just won't do it. There are lots of good reasons to invest. We were just talking about it with Gary in terms of speaking about the coal industry. These resources on which these companies base their values and sell their stocks, these are assets that must stay in the ground. They are going to be abandoned assets. They are going to become worthless. We must make them worthless. And divesting is one of the ways we can do it. We can stop aligning ourselves and our institutions. You talk to your communities, talk to your temple, see what its endowment or other investment funds might be invested in. You can get a much better return, and I'll show you that later in the slideshow, by avoiding fossil fuels. They have been losing money, not just the coal industry, which has been really dramatic, but the oil industry and to some extent even natural gas, because natural gas has become so cheap. As I've been saying, it not only would have a negligible long-term negative effect on your investments, but it may well have a positive one. And by moving your money and looking for impacts and positive areas in which you can work that are going to create a new energy environment, this can help you benefit from those companies that are taking advantage of a greener future. There are all kinds of terms we can use for this kind of alternative investment. We can call it impact investing, socially responsible investing, which is my favorite term, ESG, which is becoming mainstream. Larry Fink of BlackRock has recently announced, and I'm really skeptical about this, but that they are going to start applying sustainability and environmental, social, and governance analysis to their selection. So what it looks like they're actually going to do is create a separate fund for those who are demanding ESG investing and leave the existing funds as they are. But that remains to be seen. But it looks like, finally, after my 14 years of fighting this, that something resembling socially responsible investment, environmental, social, and governance investment, something like that is becoming mainstream. It might turn out to be, sorry?
Just good.
It might turn out to be like BP, which used to call itself Beyond Petroleum until it proved that it was really water soluble, that layer of green that is. So can divestment hurt you financially? I love this graph. This is a comparison between the MSCI KLD 400. This was a, or also known as the Domini Social Index, that was created, not yet fossil fuel free, but back, actually it was created in the late 80s, but instituted in 1990. And this graph shows you its comparison to the S&P 500 during that period, the green line being the ESG screened, the Domini 400. And as you can see, it's done a nice job of matching or outperforming, but never underperforming the S&P 500. I can get a little more precise here. These are the more recent years, continuing up from 2015 through 2018, and better yet, the comparison between the Green Century Fund, which is fossil fuel free, and the S&P 500 by using an exchange traded fund for comparison. That's the GSPC. The red line is the fossil fuel free Green Century Fund, which uses the Domini Social Index as its base and eliminates any exposure to the fossil fuel industry. And you'll notice there are a few points where it's underperformed slightly, but by and large, it has outperformed the S&P. So be assured, you're not guaranteed to lose money, as they used to say, if you get out of fossil fuel. In fact, it's pretty certain that you will gain. Here's a kind of brief history of the development of socially responsible investment, and it refers to something very important included in responsible investing, and that is shareholder advocacy. That means participating in coalitions, which you can, it's not that hard to do if you're in Pax World or Green Century or Parnassus. There's a number of mutual fund companies, Trillium Asset Management, that actively go to shareholder meetings and do not necessarily vote with management. They very often challenge management. They very often will seek out partners to bring a shareholder initiative, and have frequently been able to succeed. The far right part of this slide on my screen has your faces on it. I don't know if you guys can see it, but I hope you can. So, what is the power of divestment? Remember how successful it was in getting the end of apartheid in South Africa. It doesn't take huge numbers of people or huge amounts of money to get things to start moving. It takes a significant amount, I'll admit, but not much. You don't have to plan to reduce the power of the industry trade associations right off the bat, but we'll get there. It doesn't have to reduce the total investments in fossil fuel corporations, but it is happening. And one of the trends that's happened too is the price of fossil fuel has dropped considerably, oil specifically. As a result, you don't hear much about the Dakota Access Pipeline anymore, because the tar sands require a market price of about $120 a barrel to be practical. Oil is currently selling at $56 a barrel. So that quite thoroughly undercuts it. You don't hear much about fracking right now. That requires that oil be about $80 or more per barrel. Again, at $56 a barrel, they're not going to frack. It's too expensive and too risky, especially now that lawsuits are being brought by residents in the areas that are being damaged, like that wave of earthquakes in Oklahoma. But thinking this way also helps build a more powerful climate change movement. And as it says here, it takes away the social license of fossil fuel companies. But there's another aspect to this, and this is something everybody can do. And I take this slide from my guru, Rabbi Arthur Waskow. Move our money, protect our planet. Not just move it out of funds that invest in fossil fuels, but move it out of the big banks. Think of It's a Wonderful Life. Move it to your local savings and loan. Move it to your local bank. Even better, a credit union. All of these industries or institutions invest in your local communities. They invest in things you can see, in the businesses and in home ownership, right where you live. You can take a look. There's a few sites here, fossilfreefunds.org, weaponsfreefunds.org. Both are maintained by Ceres, C-E-R-E-S. No, I'm sorry, excuse me, As You Sow, as in as you sow, so shall you reap. So I love this. We don't want to empty the vaults. Instead, we want people to understand that the money inside the vaults of banks like Chase is driving climate change. Cutting off that flow of cash may be the single quickest step we can take to rein in the fossil fuel industry and slow the rapid warming of the earth. Thank you, Bill McKibben. So just for reference, here are some of the banks, the biggest banks funding DAPL, Dakota Access Pipeline. So you know the attitudes behind them. Many of them are still funding the fossil fuel industry through loans, and the weapons industries, and the private prison industries as well. But the worst of the banks, since the Paris Agreement up until 2018, JP Morgan Chase is the worst, but Wells Fargo, Citibank, Bank of America, RBC, Barclays, and then further down, Morgan Stanley, Goldman Sachs. Goldman Sachs recently announced that they will not finance fossil fuel any further. I think that this is purely out of profit motive, but that's fine. That's the whole point here. So once again, the hall of shame about banks, and make notes of these. If you're in any of these banks, look around for a local bank you can move your money to. You'll probably get a better return. This is a slide I would love to update because it's about 2 years old, and I'm sure that the numbers, proportions are, oh, I can move this, yay, are better now than they were then. So faith-based organizations have been leading the charge, and I know that for a fact that they have grown. And a number of state governments have started getting out of it. So this is our planet. We're all here together. Any questions?
It was very valuable. Thank you very, very much. I appreciate that.
I'm glad I could help. If you need to reach me, it's david@greenvest.eco, and there's my phone number on the screen. So, anything else?
Yes. Can you hear me okay?
Yeah.
Oh, good. Couple of questions here, and you know, Gary raised a good question or a good point that he was able to talk to his manager and do that relatively easy. Is it always that easy for, you know, people that don't have a manager to locate their funds on a personal level, or what's the best way to start doing that? Clearly, if you know you've got some money, as you were pointing out at the beginning, you know, in a specific account at a bank,
Mm-hmm.
you know, that's pretty clear. That's the banks that you pointed out.
Right.
Are there some other ways that you could
Yes.
help identify it?
If you're talking about specifically mutual funds and exchange traded funds, you can go simply Google fossil fuel free funds, and you'll see a number of the fund families that do not invest in fossil fuels. Green Century, as I said, is the leader, and by the way, the only nonprofit mutual fund on the planet, as far as I know. Green Century is owned by the public interest research groups. But there's also Domini, Pax World, Parnassus. I think Calvert has finally gotten rid of fossil fuels. Brown Advisory has an excellent fund, performs very well. It's been fossil fuel free for several years. I'm sure I've left out a few, but you'll, just Google it, you'll see a list.
X? Is that one?
Yeah, it's that easy.
No, I'm Pax funds.
Pax funds,
Yeah.
yes. Pax has a number of fossil fuel free, both their international and they have something called, I think it's still called the Global Green Fund. Parnassus Workplace, not it's called Workplace anymore, it's called Endeavor Fund, is fossil fuel free.
Okay, how about the costs of I've always been, gone by the, lowest cost mutual fund.
Mm-hmm.
Index funds, low cost mutual funds. What are the fee structures of these?
Obviously more expensive because they're committed to social screening. So they're going to have to review all of the companies periodically to make sure they're behaving themselves. They also are all very, very active with shareholder initiatives. Most of the big mutual funds, especially Vanguard and Fidelity, simply vote with management.
Mm-hmm.
They don't take an active role in shares. These things cost money. You've got to do your homework before you walk into a shareholder meeting and make a proposal. So they've got to have staff doing this. Green Century was responsible for the movement to responsibly sourced palm oil, which has been extremely successful of late. It's taken a while, but they've had to hire somebody to be focused on that task.
Mm-hmm.
So yes, the fees are going to be slightly higher, but not by that much.
Okay, then how about bond funds? Are they same thing? You can find green bond funds?
There are some bond funds that have absolutely nothing to do with fossil fuels. I tend to favor municipal bond funds because you're not going to get into that crap.
Mm-hmm.
And generally speaking, with a few nasty exceptions, municipal bonds are going to be invested in the communities. Many of them have yields that are quite comparable to corporate bonds. Rochester National high yield municipal bonds outperform almost all other bond funds. There are also 2 Community Reinvestment Act funds. And I can remember the trading symbol is CRATX for one of them, based here in Boston. So that one is investing in the Community Reinvestment Act activities. What can I call them? Enterprises. And there are a few others. Green Century has a balanced fund that includes bonds and stays with their policy of excluding fossil fuel exposure.
I'm just going to jump in. I'm going to come off of this now. Thank you very, very much for your time and your explanations. And I've made some notes. Appreciate you doing this.
Thank you. Pleasure
Okay.
meeting you, David. You
Bye-bye.
can electronically.
Okay. So the other thing that I've done is have held funds for a very long time, like decades. So therefore have a tendency.
Big capital gains.
Exactly.
Right?
Yeah. So how about that?
Well, what you have to do is get out of them gradually. This is what I've done with clients who have come to me with portfolios with huge capital gains.
Mm-hmm.
And I just work them out. It takes a number of years to get out so that in no single year are they excessively hit with them. And I try to put them in funds that are going to sufficiently outperform where they were. That it's a matter of active portfolio management, though.
Right.
David, I know I saw you give this presentation in one of the present times where someone was talking about, I don't know if it was in New York, someone who had a big portfolio there. I don't remember if it was one of the institutions that actually had a portfolio there, that they were asking about doing some of these changes. And I don't know what the outcome of that was, but what is your experience about working with institutions who want to make these kinds of changes? How is that different than the individual kind of?
Well, I have not been an advisor on any portfolios for institutions, but I have been involved in pulling together the research to be presented. I have worked with the Intentional Endowments Group. And, I've kind of been an information person for them, but they've done the heavy lifting on that. I wouldn't mind having an institutional client, but basically I have 60 families under my, that are using my management, and that's it. I'm not taking any more.
How would, suppose there are people who are on this call or, who listen to the video who might be, their temple might be in good enough shape or it has some funding that they might think, oh man, maybe I should be changing that.
I'd be glad to advise them for a flat advisory fee, an hourly charge, but I will not take on the portfolio.
Right.
Unless it's, like $10 million, and then it's really worth the effort.
Hey, David.
Yeah.
And maybe an answer to Scott's question too. is this short slide presentation of yours, which I admire, is it available to, like, I could send it to the president of our congregation and ask her to please send it to the entire board?
You are most welcome. It's been approved
Okay.
by my broker dealer. I'm not looking to prospect with it particularly, but I want to make this movement happen.
Yes.
Greatest degree
Well, and that's the whole thing. There may be somebody in the congregation here who, you know, is a investment advisor and is fully aware of the opportunities and may handhold and get them through it. Although I do want to say, I'm in the middle of Missouri and I'm using a company in California that was recommended to me by someone out there.
Mm-hmm.
So a couple other things, if I may.
Yeah.
I recommend everybody look at, just Google fourth generation nuclear. As a climate reality presenter, I get people who say, you know, nuclear? And okay, so the
Are they talking
old stuff
thorium?
is 70 years old, and now we are looking at a whole nother generation, fourth gen. A big investor is Bill Gates, and there's a documentary called Inside Bill's Mind.
Mm-hmm.
And we might have been to a beta site on this, except Trump upset the relationships with China, where they were going to have it built. So I cannot explain the chemistry, but I just recommend a documentary. It's on Netflix, Inside Bill's Mind. Also, David, because I'm a climate reality presenter, may I pick a slide regarding divestment? I always mention it, but with a trigger to remind me to mention it, a slide would very much help. Is there a way I could get access, and would you approve?
Yes, I would approve. You can take any, this is all public domain, as we used to say in the music business.
Okay. So Scott, you did record this?
Yes.
Is that my access, or
Gary,
David, you have something?
I can email the entire show to you if you wish.
Great, I'd appreciate that. I love that it's so concise. You know, I take 50 minutes to do my spiel. And by the way, my name is spelled correctly here. And if you go to YouTube and use my name, up will come a green circle, which is the logo for Climate Reality. Click on it, and if you've got 45 minutes, you can hear the science-based truth about climate change. It's really happening. Just ask people in Australia right now.
I have no doubts. I've been aware of it for a couple of decades. I lived in Israel for 11 years, from the late 70s through the end of the 80s, and I could see it happening there. We had, you know, longer summers, drier weather, much more extreme rain, but brief. So you'd have flash floods.
Yeah, here's, if I may, a couple of other numbers.
Mm-hmm.
In St. Louis, the average temperature since 1970 has gone up 1.5 degrees Fahrenheit. Las Vegas, 4.5. So you get an idea how desert environments, the moisture is getting sucked up. The heat is even more intense.
Just reading
Australia, after 5 years of drought, now these huge fires. Meanwhile, in Missouri, if I looked out my back, I would see floods again in the floodplain of the Missouri River. Great farm country, but this will be the second year in a row we're going to have floods that make it almost impossible for a farmer to get the crop in. 2 years in a row.
To get the crop in or get it out?
They didn't get it in last year.
Yeah.
Flooding started in March and it stayed through October.
Oh, that's right. Yeah. Yeah, I remember reading about that. Okay, so Gary, all I'll need is your email address. So send me an email to david@greenvest.eco,
Okay.
and I'll send you my slides.
Okay.
And I will be following up with the YouTube address of this video, so that other members of HEI will have access, and may, you know, and some people like the video part of it too. So, so thank you. Well, David, thanks very much. I don't know, Stephanie, did you have any questions? You've been, she kind of muted herself there, I think, but I didn't know if she.
Nope, she's on.
I'm good. Thank you. Thank you
Hi.
very much, David. This was interesting.
Great.
It's so nice to have a presentation where you just like get an address to Google, and that's wonderful.
Well, this was easy to sign on. It was
Yeah, it's the easiest presentation. It's short and helpful.
Good. I try not to read my slides. That's another.
Yeah,
good.
yeah, that's
It was
great.
excellent. Thank you, David.
Yeah, David, we'll take about another 5 minutes. I've got a couple of things, but I do want to first thank you so much for jumping back in after last month's technology snafu. And
We almost had another one this time.
yeah, we didn't, but we did. So that's the good news.
So David,
Yeah.
is Beth Tikva divested?
Shir Tikva, yes.
I'm sure Tikva.
We have been.
I have to sign out. I don't know if you guys can hear me,
Yeah, we
Okay.
can.
We
but
can.
there's a fire truck, rescue truck in front of my house, and I think it's my next door neighbor. So
Okay, good luck.
I'm going to sign out. Thank you,
Okay.
Bye-bye.
Scott. Thank you, David.
All right, thanks,
Pleasure,
Stephanie.
Stephanie. Good meeting you. Bye-bye.
Um,
Yeah, I got myself onto the finance committee years ago
Mhm.
and onto the investment committee the moment we had something to invest.
Mhm.
And I finally convinced the skeptics because of the funds and my recommendations have been beating the other stuff because everybody wanted to do, just index funds.
Mhm.
And I said, no, you can't do that.
Well, the Domini or whatever it was called, that's
Domini.
actually that actually is an index. It's just a green index. Is that right?
It's a green index. Yeah.
Mhm.
It was designed to be a shadow of the S&P 500.
Mhm. Without the
And
bad
you
things.
could only find 400 companies that met her credentials. And again, it requires some active watching because not all companies stay with what they said they're doing.
Mhm.
Okay. Oh, Gary, I have a
Yes.
question for you about the 4th gen. Do you
Yes.
know whether these are uranium reactors or thorium reactors?
They are not uranium. I don't think they're
Okay.
thorium. It's got a lot to do with salt.
Thorium,
Oh,
yes.
yeah.
Is that?
Yes, because
Okay.
the problem with uranium is that when your fuel is spent, you're stuck with garbage that continues to be radioactive for about 1 million years. With thorium, the breakdown is much sooner and much more benign. So
Great.
yes, that's why salt. Okay.
Is there like investments that someone like us can actually make at this point? I guess this is really in the angel or whatever type investor phase. I don't think
Yes, this is still venture capital.
Yeah, right.
As far as I know, I don't know if anybody.
I'd like to give an example of a company I heard of almost 2 years ago called Carbon Engineering. Anybody recognize the name? British Columbia company. So you can't, to answer your question, John, when things are first being, here's something being developed or it's in a beta stage, it's very hard to buy in, but I did try on Carbon Engineering because they were sucking carbon out of the atmosphere and turning it into rocks.
Yes.
So then just this summer, I heard that between them, Chevron and Occidental Petroleum bought $75 million worth into Carbon Engineering. And within months, Chevron announced it in Australia. They're going to build one of these carbon engineer design plants. It's not much bigger than a house. It's got the tanks and stuff like you'd expect, fans sucking in air, and black rocks coming out. Hopefully this is another one of those things that we dramatically need, like the 100 recommendations from the book Drawdown that I recommend everybody read.
Okay, well, anyway, we need a carbon tax for that
Yeah.
sequestration thing because it's, for a company, it's completely excess cost. It doesn't, unless you can find somebody who's going to buy the rocks from you. But if we have a carbon tax, then that will be financially feasible because by doing the sequestration, you'll avoid the tax of just putting the CO2 in the atmosphere. But we need the tax. We need the tax.
But notice
David Schreiber started off saying this very thing about price on carbon is needed. Citizens Climate Lobby would be the best place to look. CCL.
Yeah, we've got a number of pieces of legislation pending here in this state.
Massachusetts,
right, that are very, they have a lot of support. We've got some problems with the leader of the House, who is blocking a lot of stuff, DeLeo, who is absolutely against the carbon tax. And we have to find a way to get through that. But that's the heavy lifting part.
It is.
yeah.
Well,
Do
David,
you know anything about DeLeo's? Well, no, we're getting into Massachusetts politics now, so there's so few people on the call. Maybe has he stated his philosophy on why he's against it exactly? Because I can see one thing is that, you know, if Massachusetts, a little tiny state, enacts a carbon tax, and the, you know, Rhode Island, Connecticut don't, it's so easy for a company to say, well, I'll just move on the other side of the border and continue my operations and I'll avoid the tax. But I don't know.